Hello traders, Greg here with a market update. Okay, so look, the focus for the market has still been Bitcoin. It's had a very big sell-off in the last few weeks. And overnight we did make a new low. We just went sub 90,000 to print an $89,000 low. Before we saw the buyer step in, and we saw a pretty decent rally, up about $4,000 or $5,000, back up towards about 94 before it's come off a little bit going into the close. But look, there's been quite a few bulls who've got very vocal about the price action overnight. They're starting to think that potentially, we're putting in a low for this sell-off, and they're getting excited for the end of the year being positive. Look, I think that before we get excited, I think really, we need to get back above that psychological 100,000 level. Need to see some daily closes, weekly closes, and a monthly close at the end of November above 100,000. I think before you can have, confidence that this sell-off is over. So I think at the moment still need to respect that potentially, we could still see lower levels. But anyway, maybe we do some work at these lower levels, so just range trade between maybe 90 and 100,000. Okay, moving on to US equities, S&P, NASDAQ. Yes, they haven't had a good time recently either. They have been trading lower. Obviously, Bitcoin has weighed on US equities, but besides that, probably the bigger story is the fact that the market has pared back the Fed rate cut bets for the December meeting. Before the Fed met last time when they did cut rates, market was actually pricing in up towards a 90% chance that the Fed would be cutting in the December meeting, as well as the September cut that they got. But since then, they've pared that back all the way sub 50%, and it's down around 45% at the moment. So that's probably been one of the reasons why we've seen the equities lower, because obviously they love rate cuts. So tonight is important because we do have FOMC minutes from the last meeting. Yes, they did cut in that September meeting, the October meeting, but it'll be interesting just to see how the various Fed members and how many dissented, and whether or not it changes the market outlook for the Fed rate cut for December. But I think that it's probably not going to be a market-friendly FOMC. So that is something that tonight the market has traded nervous going into this. With NASDAQ off about 1.2%, S&P off 1% overnight. But the bigger event risk, and probably the biggest event risk this week, 100%, is going to be Nvidia earnings, and that's post-market close tomorrow. So after the FOMC minutes. Now, one of the big themes and another one of the reasons why equities are tracking lower is that market is starting to question basically equity valuations, especially equity and AI valuations, and Nvidia is front and center with that. So I think it's this could decide how risk trades literally for the rest of the year, because if Nvidia goes lower, it's going to take all the boats with it. If you look technically on the daily chart, it does look like potentially Nvidia's got a head and shoulders top formation, and we're sitting at the neckline just before these earnings are released. So it does look a touch ominous. So certainly you need to be careful after market closes in the US session on Wednesday tonight. Other than that, gold, it's been volatile as well. Last night it traded down to 4,000, but some good support there, and it rocket shipped all the way back up to 40.70. Gold has stopped trending, that's for sure. We made those record highs up to 4,400, and since then, we've been trading sideways for the last month in huge ranges. But at the moment, it sort of seems as if the range is from 4,000 up to 4,200, so I'd be seller up at around 4,200, and obviously the support at 4,000 has held so far. You certainly don't want to see that support at 4,000 break, because that could open up much lower levels. Something that gold may trade on Thursday is important, because finally we're going to see the delayed payrolls report that we missed in October. So September payrolls is going to be released on Thursday. Market's expecting plus 60,000 for headline unemployment rate to sit at 4.3%. So not bad numbers. So you've got to watch what happens with bond yields. If US bond yields go up, no doubt we are going to see a stronger dollar, and that will weigh on gold, and also it'll mean that the market is paring back the rate cut probabilities and chances and bets for the December meeting. So another event risk coming up with payrolls coming out on Thursday. So it's quite a lot coming up in the next couple of days, and certainly I think that these event risks are pretty important for potentially giving us direction for risk for the end of the year. So if somehow the market gets through this and starts trading higher, there's a good chance we're going to go into Christmas, New Year positive. But if we do not get through the next few days, I think that potentially it may not be the most happiest of Christmases. Anyway, good luck with your trades, be careful, and we'll check back in with you shortly.